Hey everybody, welcome back to Kate's and Trading. Please bear with me while I have the sun in my eyes as I record this, but I'll get through it. It's going to be fine. Anyway, I wanted to continue this education series related to trading and charts and all that good stuff. So if you're looking at my chart now, I basically just have a bare bones chart showing. I happen to like to use bar charts. People like to use candle charts. There's Heikin-Ashi. There's all kinds of different charts you can use. I always have just been a bar chart user. It just happens to be my preference. The different color schemes, basically green means the price is up for the day, and red means the price is down. But today I wanted to talk about moving averages. I'd like to talk about simple moving averages and exponential moving averages. So essentially a moving average is nothing more than the average of price over a length of time. So in the indicator that I had created, if I go into its settings, I have exponential moving average at the top, because to me that's more important, and simple moving average below that. For now, I'm just going to show you the simple moving averages, and we'll switch back to the EMA ones shortly. So let's put those on. And for some reason they're not showing. Oh, because I don't have this on. Okay. So now that there's three lines here, I have the red, yellow, and green. Kind of hard to make out. It's sort of a pink color. But basically, these are three different simple moving averages for different time periods. So if I go back to my settings, I have a 21 for the fastest simple moving average. So that means give me the moving average for the past 21 bars, medium, length of 50, and slow, length of 200. The reason I'm using these is because they're sort of, I don't want to say the industry standard, but they're very common. They're used by a lot of traders. I generally don't use these that often. I only glance at them here and there just to get a good idea of the overall trend in the market. So sometimes I'll show just the fast and the medium just to see which one's above the other. But for now, I'll show all three. And looking at TQQQ, right now, this is the kind of behavior you want. You want to see the fast moving average above the medium and the medium above the slow. That overall means things are trending upward. If we look back here on, September 24th of 2024, this is when it crossed over, the fast crossed over the medium. But prior to that, the medium was above and the fast was below, and that usually indicates some downward behavior, downward movement. For me personally, I find the simple moving averages at this length especially to be not very helpful because I'm not a long-term trader, so I prefer what I've done with the exponential moving averages, which is why I have them higher up on the list. So let me switch over to those. So I have my fast EMA plot and my slow EMA plot. Oops, not the plots, sorry, the fill. And that ends up creating the ribbon. So my fast EMA length is only 5 bars and my slow is only 13. I believe it's more common to use things like 8 or 9 for the fast and 21 for the slow. But to me, I want to have the EMAs be closer to the price because I move fast. I get in and out pretty quick. And keeping the EMAs closer to the price, for me, it just makes it easier to see what the most recent trends are doing. And now an exponential moving average only differs from a simple moving average in that the exponential puts more weight on the bars that are closest to the current day. That's all it is. So for my fast EMA, I'm just using the 5, and for the slow one, I'm using a 13. And when TradingView renders those, I'm telling it to fill in the difference between the fast and the slow EMA. Now, when the fast EMA is above the slow EMA, then the ribbon turns blue. When it's the other way around, the ribbon is pink. So at a glance, you can sort of see if the chart is trending upward or downward. It's not enough to just say, oh, our EMA switched over from pink to blue, so that's a buy. And vice versa. You'll get killed if you try to do that because it doesn't work out that way. It's a nice thought, but you have to use more skill than that. But it is a good idea to show it, at least for me anyway, because it helps me see at a glance what the charts are doing. So it's very, very useful. And I've just updated my indicator to include a whole bunch of information related to these EMAs because I find them so valuable. So in my indicator, I have this last bar info thing, and I'll run through that real quick. So this has the day's date, the closing price, and I'll just show the tooltip too so you can see what it's doing here. the change, the percentage change for the day, a suggested stop loss based on average true range. We can get into that in another time. The relative close position, which means where is this bar's closing price in relation to the height of the bar. So 100% means you close at the top of the bar, 0% means you close at the bottom of the bar. So anything above 50 is more than half the bar. So that's, you could argue that's bullish. I like to say if it's like 75% or more, it's definitely bullish. Then I have the volume ratio. So the volume ratio is how much volume do we have compared to an average day. So if we look down here, we can see that the volume ratio is 0.96, which aligns with this blue horizontal bar because that is my average volume. Aside from all that, now we're going to start talking about the EMA stuff. So the EMA separation, and this is stuff that I kind of concocted on my own. I don't know if anybody really, in the industry looks at this kind of data, but I think it's helpful. So EMA separation is how far is the fast EMA from the slow EMA? If you subtract the fast from the slow, what do you get? That's what the separation is. In this case, it happens to be 1.73. The number itself doesn't provide a whole lot of value, aside from what I like to think is the bigger the separation, the more strong the EMA trend is, right? If you only have this little tiny painted area, then that's not a strong EMA trend. But if you have something like this, where it's separated a lot, then that's a stronger trend in my opinion. This EMA with the triangle, it's EMA delta, so EMA separation change. This is saying, what is the EMA separation today compared to what it was yesterday? The up triangle means it's a good situation. If it's a down triangle, it means it's bad. So basically, when we're in a downtrend, if the EMA delta is getting smaller, then that is a good thing. So that's why, even though it's negative here, because this is in a downtrend, we have a bullish up arrow or up triangle, because we want to see this pink ribbon getting smaller and thinner and tighter, just like it does down here, way down on Friday, August 9th, 12th, whatever, where it's starting to come up. And in the opposite scenario, when we have an uptrend, we want the EMA separation to be getting wider each day, because that means the uptrend is getting stronger and stronger until it isn't. Here I have the fast EMA today compared to the fast EMA yesterday. If the fast EMA today is greater than the fast EMA yesterday, then that's a good sign, so that's an up arrow. And likewise for the slow EMA. If the slow EMA today is greater than the slow EMA yesterday, then it's an up arrow. In this case, it happens to be worse. So the slow EMA today is lower than the slow EMA yesterday, and that is not a good sign. So ideally, if you're looking to buy something, all three of these will have the up triangle. And this is, like I said, it's not a standard thing, but it's just kind of a helpful hint to me to help me decide if I should be buying or holding or selling or whatever. Like in the case of this with TQQQ right now, this is not a buy point. And I'll get into a whole bunch of stuff as the videos continue about like what things I look for buying and what things I look for selling and so on. So there's a lot to learn here. I wanted just to have a quick video about the EMA stuff here in case anyone is interested, and why I have these ribbons showing up on my charts all the time. So I'm hoping this is helpful. I'm going to continue these educational videos as much as I can. Hopefully there'll be some sort of rhyme or reason to the order that they're going in. I don't want to just like dump a whole bunch of information on people and have it not be in any sequential order. So trying to start small and go from there. I feel like as time goes on, the little nuggets of wisdom that I might be able to provide or whatever can be more and more helpful. So hopefully people will hang around and the videos will get better and the channel will grow more and more. That's my goal anyway. So thank you for sticking in there and watching this video, and there's definitely more to come. And as I said before, this is not financial advice. I'm not a financial advisor. But if you do like this, please like, subscribe, and hit the notification bell. I plan to keep on doing this stuff forever, honestly. I enjoy doing it. So thank you everyone, and until next time, see ya.